What is good, Tesla family? It's Ray J back with another video, and in this one I'm going to be talking about the one and only Tesla stock and what you should be looking after for the future. I'm also going to break down whether or not Tesla is going to continue to rally going into next week based off what we're seeing, what's going on with the overall market, and how it may affect Tesla, what the news and data is telling us about the overall markets in Tesla, and what on earth the Fed just said that's actually helping the market pump the way it is. And before I break anything down about this, before I get into any more details, I do have to mention a couple of things before starting. Firstly, I'm not a financial planner. Make sure you take none of this as financial advice whatsoever. And also, if you guys can, please smash the like button if you want to see more videos like this. It not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Moomoo link down below and in the description. If you sign up for Moomoo, the link down below, and deposit $100 into the account, you're guaranteed 7 free stocks, and 5 out of those 7 free stocks could be a free Tesla share. It's a limited time offer. The offer ends in just 4 weeks. Make sure you check it out before they run out. With that out of the way, let's get on with the video. So anyways, Tesla's up 3.61% for the day. In my previous video, I predicted that Tesla would get a nice bounce today. It would push to about $200 a share around there and get a rejection of 200 and close in the high 190s. I predicted that Tesla would try to fill this gap, but would actually have a little bit of weakness compared to before after what happened during Investor Day and would actually fail to fill this gap. And that's almost exactly what ended up happening. Now, the real question is seeing the fact that we got a crossover on the MACD for Tesla and we do have some bullish momentum remaining, could Tesla continue to push up in the future? I'm going to actually break that down in a couple of minutes. But to start us off, I mean, the market is actually ripping to the upside. It was pretty crazy to witness this happening today. The question is, why on earth is this happening? What is causing the market to pump the way it is? Now, I mentioned to you guys a couple of days ago, though, that we had a bullish divergence developing on SPY, meaning that the overall share price made a lower low compared to this low right here, but the RSI, which was at 34 back then, its low became like 37, 38. It made a higher low. So the RSI makes a higher low, the stock price makes a lower low, and that's a bullish divergence that ended up forming. So I mentioned to you guys we'd likely get a bit of a bounce. I just wasn't sure if we would drop a little lower than bounce or if we'd just continue to bounce from there. And once we got the nice bounce, I told you that there's a very high probability the market would try to keep going. That's why I told you guys the market would likely bounce and continue going up, and this would help Tesla push up too. But the problem and the real difference was I didn't actually know where the market would go. I actually thought the market would stop around the low 400s. I did not expect it to push up over 1.6% all the way up to 404 on SPY. That was pretty insane to watch. And we still have a lot of very strong momentum. So we're likely not going to just crash instantly. It's more likely that the market could pull back a little bit to cool off our RSI, which is quite overbought right now. We're likely going to see the market cool off a little bit and then continue with the bullish momentum that we currently have. But I want to break down something first before I like really don't get way too ahead of myself. I want to break down why the heck the market is doing this, okay? Why is the market turning so bullish all of a sudden? The first thing that happened was from the Fed, Bostic came out, one of the speakers, and he actually stated that he's in the 25 basis point cap. That's exactly what he just said. He's in the 25 basis point cap, and he's actually predicting that the Fed may pause very soon. Now, in my opinion, I strongly disagree with him because I don't think you can actually make that call just yet until we see the next CPI report. But once he said the word, the magic word, which was pause, the market loved it. The market exploded and the market continued even going into today. Now, another reason why the market continued to go up is because of the options chain. The market makers from the back end knew that a lot of people were shorting the market, thinking the market was about to crash. I was telling you guys the market could get a counter trend rally. That's what ended up happening. But I do agree that the market could crash later on, depending on CPI, depending on the Fed, and many different factors like the recession. Right? There could be a crash later on to still come, but until then, we have some time for the market to rally until CPI. Now, why did the market squeeze this much though? The answer is I actually didn't expect us to squeeze that high. I actually thought we'd stop around the low 400s and then maybe get a small rejection and close around like 399 to 400. We actually closed a little bit higher than that, quite a bit higher actually. That's because of how aggressive the put buying was, because of the 0 day to expiration options, and also because of the fact that on March 10th and also like this Friday, we had relatively high puts to call ratios. We have a 1.93 put to call ratio for Monday, also 1.56 for today, and then for next Friday, it's 2.12. So the people buying into those puts, shorting the market really hard, they got absolutely annihilated today. The market makers knew this and they did this intentionally. And on top of that, not only did they make money doing it in the process, but a lot of institutions decided to reposition during times like these. And they repositioned by closing a lot of their puts so they wouldn't like incur a lot more losses, and they would end up hedging by buying shares. So they started buying like crazy. The algorithms were set to buying today. If you were actually watching them, you would have noticed this in real time, and that's why the market started to pump as hard as it did. It's kind of like a mini short squeeze. I wouldn't say it was a massive one, but it was kind of like a short squeeze. Now Tesla was a little bit different. Tesla actually did not get the same level of short squeezing, and that's because of the fact that it was not as heavily shorted as we did see SPY being, because the majority of investors, as of recent, were actually buying into the calls for Tesla. They were just buying calls. They were betting that Tesla would get a nice run to the upside. They just continued to buy the calls, and we actually had relatively low put to call ratios. They were actually in favor of calls, and this time, the Tesla investors actually had the edge. That was actually good for them to see the market rally the way it did. So congratulations to them. And the real question is Tesla going to continue like this? And my answer to that is most likely, I think the market will once again pull back a little bit to cool off the RSI and etc. But there's a high probability we're going to continue to push. And this is something that's kind of unexpected in a way, because there were actually Fed speakers. Not all of them were actually very, very dovish. Some of them were actually kind of hawkish today. Logan was kind of hawkish, so was the other person, Bowman. They said some hawkish things, such as there's going to be more tightening, the financial systems are vulnerable to the bond market stress. And despite that, the market did not care. The market just kept going. Once again, this is because of manipulation, destroying the shorts, pumping the markets with the algos, lots of buying pressure. This, in turn, is why the market's going to keep going. And another bullish piece of news was Apple. Apple's actually going to be building a $700 million iPhone plant in India, once again shifting away from more dependence on China. So this was very bullish news for Apple. Apple exploded, which helped the QQQ and SPY also push up alongside Tesla and the collective market. Now, what can I say about this rally? Is it going to last forever? I do believe Tesla, it, it could explode if we continue to see the rally, which we most likely will. I do believe we're going to continue pushing, but there's no guarantee the rally is going to last forever. That's because of the fact that we have CPI, according to the Fed's website, on March 14th. Right, March 14th is going to be CPI. This could be a make or break for the rally, meaning that if CPI is low, yes, Tesla could explode even harder. The whole market could squeeze like crazy and break the previous highs we made if CPI is very low. But the signs are pointing in the opposite direction, that CPI is going to be hot most likely. Now, that's because of the fact that the jobs market is still very strong. We're actually getting very low initial jobless claims reports that just came out like yesterday, meaning that the jobs market is strong. People are still buying lots of things. People got into record credit card debt in February. There's still lots of buying in a relatively strong economy, stronger than what we want it to be, which tells me that yes, CPI might be hot. If CPI is too hot, the stock market will likely reverse and Tesla and the market might end up seeing a bit of a drop. And then the Fed could also cause an even bigger drop on March 22nd, which is when we have the next FOMC meeting. So to me, like I said, I do not agree with what the Fed official Bostic said, because I don't agree that we could guarantee a 25 basis point rate hike. I don't even think he should call that until CPI comes out. Because remember, the last CPI that came out, the last PPI and the last PCE, the different inflationary measures were hot. So it makes no sense to make this call right now. The stock market is rallying because they believe that the Fed might pause soon. We could get a soft landing. It's artificial. And even though it's artificial, you could still make money in the process by buying calls and etc. But I'm just making it clear, I can't guarantee this is going to last forever, because once CPI comes out in just about 11 days from now, everything could change big time. We also have Jerome Powell speaking next week a couple of times, so I don't know if he's going to pump the markets again. Be very careful, but overall, like I said, the trend is still there. The market did not show any weakness today. It's likely going to continue. So now for Tesla, we have some more bullish news that came out. Tesla's deploying its first supercharger version 4. This is the next one that just came out for the next gen. And this is bullish news in my opinion because once again, Tesla's innovating and they have faster charging stations, much better than the previous generation. This is also going to help them as they ramp up production. They need new chargers as well to start the deployment as fast as possible. Now, what else is very important is as more and more individuals start buying into Teslas, they need faster charging. There's going to be higher demand for charging. And that's part of the reason why Tesla actually implied that in the future, they're going to make the charging stations much more luxurious, maybe even have some charging station diners in the future. Now, what else is very, very interesting is the fact that the news came out and we actually saw Tesla's Investor Day featuring lots and lots of different investors, lots of different executives right over there. And the news about it is just barely slowly coming out. I also want to remind you guys, like I said yesterday, many investors that were actually there are still bullish on Tesla after what they saw. For example, Wedbush, they just said that they're reiterating that Tesla's going to likely outperform the market again. So they're still very bullish. On top of that, Needham actually reiterated that you should hold on to Tesla. They didn't say buy more or sell, they just said hold. And then some securities actually kind of downgraded. They went from Tesla outperforming to becoming more neutral. Whereas Daiwa, I don't know if I said that right, Daiwa Capital is saying that Tesla is likely going to outperform. So we have some mixed analysts, but the majority of them are saying either hold or buy into Tesla, which is once again still kind of bullish, at least for the short term. Now, Mondays tend to be green days for Tesla. I am hoping for a decent Monday. But the thing about Tesla is we're not necessarily getting the same amount of like shorting as what we got in the past. The overall short interest of Tesla is relatively low at the time I'm recording this, and we're not seeing like a crazy, crazy short squeeze like event for Tesla so far. I also believe that shorting is not going to be the biggest thing that dictates Tesla pushing up. I think that what's going to be bigger is algos and also FOMO buying from like retail and also other institutions buying in as well. A lot of buying pressure, especially from the algo side, is likely what's going to drive Tesla up over the next couple of weeks. I told you guys there's a slight increase in inventory levels for Tesla. Once again, they're dropping, meaning that we're continuing to see Tesla being bought up. Another thing that's kind of bullish is the volume was only 153 million. This is technically bullish because less volume typically means that a stock won't perform as well. But despite that, Tesla's actually green on less volume, meaning it requires less buying pressure and less volume compared to the average we had before to still push this thing to the upside. That's some pretty good news, in my opinion. So for the market, I'm not going to go into any specific details about where I see retracements and things like that. I want to keep this video a little bit shorter, but I do believe the market's going to actually maybe retrace a little bit. It would be very healthy for us to retrace a bit to cool off our RSI and establish a higher low relative to before. That would be a lot more healthy. Now, this market is just ripping to the upside. There's no even like sign of weakness so far. It could just keep going anyways, but even if it retraces a bit, I'm just trying to say I want to see this thing retrace and establish a higher low than before and then continue going because SPY has a lot of gaps above and might actually attempt to fill these gaps if we see momentum continue like this. Now, it's very hard to predict exactly what the algos are going to do on Monday because I'd have to see it in real time to tell you guys about it. But the algos might be trying to push the market and SPY to fill this gap around 406. There's another gap at 408. We might try to start filling these gaps. That would be bullish for the overall market. I told everyone the dollar would likely retrace a bit. The dollar was pushing up very hard, completely fine, and we'd likely see this thing drop to about 104 or so, or the like lower 104s. That's almost exactly what happened. The dollar dropped a bit. This helped the market pump quite a bit. Now, despite the dollar dropping, even if this thing goes down to like 104, even the 103s, completely fine. Completely fine if we do get a crossover right here because we still have a breakout from the falling wedge and the dollar is likely going to continue to push up later on as the Fed continues to tighten financial conditions. Meaning that, yes, the dollar could come down. It's completely fine. The stock market might go up because of this, but later on, they're going to switch directions most likely if we get a hot CPI and the Fed continues to tighten more. I also want to note that I told you guys about the 10-year Treasury yield. This would likely come down, meaning that the market would have some bullish momentum because of this. I told you guys that this thing would break below 40 and get to about 39. We actually ended up doing exactly that. We didn't actually fill this gap like I said we would. Instead, we gapped down and continued dropping. So this was like a gap and drop. And this is kind of like an island reversal in the opposite direction. Now, this is telling me that because we're down over 2%, if we continue to break below this 39 level, we could start filling a lot of gaps to the downside in the 38s. We do have quite a few, gaps in the 38s for the 10-year yield, meaning that this gives the market a bigger edge to remain bullish, at least temporarily, right? And the final thing is, as SPY is continuing to break to the upside with this bullish momentum on the daily, you can see on the daily, we're actually getting closer to getting a crossover on the MACD. Once again, very, very good stuff for the bulls for the time being. But I believe the odds favor that this bullish rally won't last forever. It might get stopped because of CPI or the Fed on the 22nd of March. This, in my opinion, is a counter trend rally. I don't predict we're going to break like 418 or go like that high, but I do think we have momentum and the potential to continue pushing as the days go on. I just want to see a bit of a cool off first before we continue, but overall, the destination still seems more towards the upside. Now, what I wanted to note about this like momentum we're building is the VIX. I predicted the VIX would come down to about 19. We actually dropped to about 18.5 about. We actually dropped lower than I expected, and we actually have a bearish cross on the VIX. So the VIX, it looks like it's going to end up coming all the way down to retest this wedge into the low 18s, if not 17 or so. It might try to bounce off 18 first, maybe try to get back to like 19 and maybe reject off that and continue to drop to retest previous resistance of the falling wedge, which is now going to become support. So I could see this thing come to the 17s very soon. If that happens, right, this is going to be correlated with the market pushing up. This tells me the stock market might push up and cause this to happen, right? And that in turn means Tesla could continue to rally. Now, how high is Tesla going to go? That's very hard to determine. If we do cool off a little bit in the beginning, that would be completely fine. But eventually, I think Tesla's going to continue to push and try to fill this gap around this 203 area. And once we fill the gap, we're likely going to continue to go up and start to retest this trend line way up here. If Tesla ends up retesting the trend line, it's likely going to try to fight for the 207 zone, 205 to 207 zone. I could see Tesla get there if the whole market continues, which it most likely will. Now, what else is worth noting is Tesla wants to actually break out of this. It might struggle in the beginning to do this, but if we do get a break above this trend line, above like 205 or so, this resistance, then I could see this thing not just fly to about 210, but it has more momentum and more potential to actually push up even harder. So maybe some of these remaining shorts, I mean, there's not a whole lot of them like compared to before, but some of them could still get squeezed. And also, we could actually see a lot more algo buying than before if Tesla does get the breakout, especially if it breaks and holds 200. That would be pretty bullish. And then 205 is next. If you break that, this thing could actually fly and get closer to about 220, if not 215, right? So it's very possible. Do I think it's going to happen? I think that right now the odds are favoring that, but it does depend on how the market performs for next week. I think the odds are favoring Tesla's going to try to continue to break to this trend line at the very least. And is it about to like squeeze and explode? If the market does get a squeeze and everything squeezed that continues, I believe that could help Tesla. The odds are favoring that most likely happening. But once again, I must warn everyone, do not get too caught into the whole euphoria. Don't get caught into this buying pressure. Be very careful. Yes, you can buy calls and like swing them, but remember the saying, those who secure profits will not lose money. When you secure profits, you're not losing money because we have CPI, hold on, CPI on the 14th of March. Okay, this could break the rally completely and completely change everything, turning this rally into a bull trap. That's very possible. Okay, so I'm just warning everyone. Yes, it's okay to be excited. Yes, it's okay to like make money on the way up, but at the same time, be prepared for CPI. It could completely change everything. Thank you all so much for listening. The odds are favoring Tesla making a nice move to the upside in the future. Are we about to squeeze? It is possible, so sure. But I'd have to see more information to really give you a better answer. But I do believe Tesla will push more to the upside going into next week. Thank you all so much for listening. Please enjoy the rest of your weekend. I will make a video about Elon Musk tomorrow. And until then, I won't talk too much about technicals after this until Sunday. So thank you for listening. Be on the lookout for the video coming out on Saturday and another one on Sunday. And I'll see you guys in the next one. Enjoy the weekend. Tesla to the moon because the long term future is still incredibly bright. And peace out.